Well, we really do love to hear from you, and so many of you send us email questions. We want to take a few moments today to answer some of your financial questions. Pat, this is Kira, who says, I received an unsolicited email recently that said I could make up to a 36% annual rate of return with negligible risk investing in tax liens. What is a tax lien? Does this sound like a legitimate expectation for such an investment?
Carrie, it's not a legitimate expectation. If 10% would be about max, so 36% is just is a come on. It's a come on. But what is a lien? You know, if somebody owes somebody something, that person can bring some type of legal action and put a lien on the property. And a lien means they have a claim against the proceeds of that property. So the tax people, instead of collecting the taxes, they say we're owed the tax, we haven't been paid the tax, and therefore we're going to put a lien against the property involved.
So how does somebody like Kira benefit from that?
The government then begins to sell these tax liens, and they're guaranteed. They have generally first position. And it's not a bad investment because, you know, you'll get the 8% or 10% or whatever off those tax liens.
But if somebody's offering this kind of a return, you should be suspicious of the legitimacy of the whole?
I think so. I think it's a come on. But, I mean, you know, it's the financial press is filled with hype, and you know you might have to get used to the hype. You know, shares rocket up 400% in the last 2 weeks, that kind of thing. I mean, you know, you sort of take it with a grain of salt.
Buyer beware in that scenario.
But there's a follow-on question that goes along with this.
Well, this is Jody, who says, I know we can't deduct losses from an IRA, but how about a 529 plan? Our kids are 5 and 8, and their 529s have taken a severe nosedive. Can we take a tax loss from a 529 plan?
Jody, it's a real tricky thing to try to get a loss out of that. The best you get, perhaps, is a modest loss, but you can only take a loss out of that portion of the account that has lost money, which means you have to probably close the whole thing out, which means you have to pay probably money that you have deducted from your state income tax. So it gets to be a real hassle. My advice is hold on and ride it through and let it grow. But I wouldn't try to play games on tax losses. Well, I mean, 529 is pretty small to start with. I mean, you're not looking at big money.
Okay, Greg says, Pat, what's the difference between playing the stock market and playing a slot machine? Investing in stocks and bonds seems similar to gambling, and it has devastated many people. What do you think is the distinction?
Greg, old buddy, you have got it wrong. Investing is investing. And if you're going to invest, you know, Warren Buffett says every share of stock he would buy, he wouldn't buy it unless he would want to own the whole company, you know. And what do you have? Well, you've got the assets, and you've got the liabilities, and you've got the earning potential, and you've got the price earnings, and you have various other ratios. And you're trying to look at a long-term trend. I mean, how fast is the income growing a year? Is it compounding at 20, 30, 40% a year? And, you know, that kind of thing goes into the calculus of investing. That is investing. And so anybody that thinks that, quote, playing the stock market is like some kind of a roulette wheel, they don't know what they're talking about. But on the other hand, these day traders and people like that, they're playing for a move up. Hey, the market moved up 1/4 of a point, sell, and it went, you know, down or something, buy. I mean, it's foolish, and they lose their shirt that way.
Well, you've always said knowledge is what makes the difference. So exactly. Really understanding the whole thing
you
and being...
have to study it and understand sectors. You have to understand where the market is going. You understand what the interplay of trade and international finance and all this stuff. And after a while, it kind of gets in your gut. You begin to see what's good and what's bad. And then all of a sudden, something just jumps at you. Hey, look at that. And you buy it, and it goes up.
Mm-hmm. Okay, this is Philip, who says, if a large investment firm goes bust, would I lose the money I have in mutual funds, IRAs, or other accounts?
Well, Philip, as I understand it, the big companies front for those funds, but the funds are separate from the big companies. They're owned differently, and So if the big company like Lehman Brothers goes busted, the individual funds shouldn't take a hit. And in addition to that, if one of them does, there are, credit agencies just like the FDIC that can stand good for the losses of individual investors up to a particular point. But if you're a big hitter and you're talking about tens of millions of dollars, then you're kind of on your own.
Okay, this is Fred who says, my wife and I are both 72. We own our home, but we wonder if we should sell it at $250,000, invest that money, and use the proceeds to rent an apartment. With insurance, property taxes, and maintenance fees going up all the time, do you think this would be a wise consideration at our age?
Fred, it definitely is a wise consideration, but it's look at the numbers. You've got, what, 6% on $250,000. You know, how much is that? That's what you make out of that $250,000, unless you're better at the stock market than most people are. And so you're going to take that money and you're going to invest it, and then you're going to use the proceeds to rent an apartment. You're not going to get any deduction for property that you would get if you owned a home. I mean, there's so many intangibles. Do you like having a house, your own home? You come home at night and it's your home? Or do you want to come into somebody else's apartment? Some people just think it's wonderful. They live in an apartment. They don't have to worry about the maintenance of the yard. And, you know, they just live there. It's nice.
What about with the cost of, or with the price of real estate being a little low right now? Would he be better to hang on to that or no?
Again, it depends on, it's just, as I say, do the math. You have to do the math.
For your particular situation.
Yeah, but right now, apartment rental has been relatively low. That's been cheaper. And you some good deals on apartments. But it's a question of your own mindset. Do you like the comfort of having your own home? You open the door and it's your house. Or do you want the modern feeling of somebody's...
Privacy versus convenience, right?
Man, you have to get on an elevator, go up 3 floors to get to your house. All right.
Okay, this is Raymond who says, do you think silver will appreciate along with gold? Is it a good investment? Do you think they'll both go up by the end of 2009?
Well, silver's already gone up. It's gone up from... $10 or $11 up to $14 or $15 an ounce, and it'll probably keep on going. It'll walk more or less in tandem with gold. So the answer is it should be a pretty good investment. But I don't. Silver's an industrial commodity. Gold isn't. Gold is more precious metal, and silver. They make things out of silver. They use it in all kinds of processes. And so there's always a market for silver. And now you look at what the Hunt brothers did with the silver market. They ran it up to over $50 an ounce, and it just went crazy because there was a squeeze on silver. They tried to corner the market, and why they did it, I don't know, but it cost them a bloody fortune. It was several billion dollars that they lost on that transaction.
Wow.
Yeah, but there's nothing wrong with silver. I think silver's great.